In the previous video, we spoke about opportunity cost. Today in this video, we are going to speak about the costs that are associated with opportunity cost. Number 1, implicit cost. Number 2, explicit cost. First of all, let's come to explicit cost. Explicit costs are those costs that are directly incurred out of the pocket due to business operations. What do I mean by business operations? For example, you have a business, you pay wages of employees, you lease out a land or lease out a property, you buy a property to build factory, you buy raw materials, you pay the utility bills, etc. etc. This all the bills and their costs are incurred and listed down under explicit cost. These costs are easily identifiable due to their nature because they are always transacted in cash value or monetary value to be precise. For example, the manager of your company goes to a business trip and gives you a bill of rupees 50,000. That 50,000 is your explicit cost. You hire an agency for advertisement of your products and that agency charges you rupees 70,000. Rupees 70,000 goes into your explicit cost list. These costs are also easily identifiable because they are accounted into various balance sheets and income and expense data of the company. Explicit costs always have a monetary value associated with them, maybe in different currencies. For another example, in this scenario you have a bakery and your oven is faulty. So you need to repair that oven. So you will spend approximately rupees 20 to 27,000 maybe for repairment of that oven. That cash or value of that repair goes into the explicit cost list. For another example, let it be very clear that you are a business owner and you want to upgrade your software. The price for that upgradation also goes into explicit cost list. Coming back to the case of implicit costs. These implicit costs are also referred as imputed cost, notional cost, or implied costs. Implicit costs always refer to the opportunity costs that are incurred while using one's owned assets in place of leaving them out for other potential gains. These implicit costs are very hard to track and are not present in balance sheets of companies. The reason that they are not present in the balance sheets of the companies because these implicit costs do not involve any type of cash transactions. They cannot be easily tracked or identified because the actual money does not change hands. And so the direct monetary losses or gains are never accounted for. Monetary transactions do not account for these implicit costs because other kinds of tangible elements like time, efforts are involved in these types of implicit costs. For example, a business owner in its primary days does not draw any type of salary for the betterment of the business growth. So his time, efforts could have been used in other places for other potential gains, but it was not used in those potential gains, and in spite it was used in the growth of this business, and this effort and time accounts for implicit cost. In its true essence, implicit costs always measures the foregone potential gains from the other usage of the owned assets or the time and efforts. These implicit costs really have to be taken into account and are very essential because they are not accounted for in financial statements of a company or a firm. In an example or a scenario, let's take a case where a startup owner starts his own business in the room of his house. That room could have been used for other purpose or rent fetching, but that rent is not credited into his account and his business is using that room. So the rent of that room goes into the implicit cost list. Second example, unpaid family labor. Let it be a shop or a small piece of land where the whole family comes together and helps in growing the shop or maybe cultivating the farm. That effort and time goes into the implicit cost list. In another scenario, a freelancer does not take up any type of project for his personal work or his personal project for 1 month. That money which he lets forego for his personal project goes into the implicit cost list. Last scenario, to make it very simple, a farmer does not rent out his tractor to others and uses it in his own field. The tractor gains some wears and tears which needs repairment. That's the implicit cost of not renting out the tractor. Basically, what is the key difference between explicit cost and implicit cost? Explicit cost can easily be identified and can be seen, but implicit costs cannot be seen and are the opportunities which are lost but still are very valuable in many of the scenarios.